What's up, guys? In our last video, we spoke about the divergence, on this platform, right? So now we're looking forward to doing bigger things, or continue on this inducement. I can't wait to get over with this file, this PDF file, because it's very, very important for you guys to know about liquidity. Because liquidity is everything about the market. The market moves with liquidity, you know. The market cannot do without liquidity. Everything about the market is about liquidity. So the best way you can make money in this market is by knowing where liquidity is found and finding where you can grab the money from, the profit, if you know what I mean. So yes, you can look at this now. Seeing this diagram, this chart, it's an example of everything I'm showing. You see this point is a point of taking away liquidity, if you know what I mean. So, just an example, this line below here was showing us a liquidity, but just example. So now above here, divergence. It's the same example above here. Don't get it twisted, because looking different. The one is like it's a drawing, right? It's a drawing. But down here it's not like this one is like a chart, you know, you know. This one is a downtrend liquidity as well. See it properly, confirm. So looking at this, you can just realize there are so many things you need to be aware of, right? And also you can see these candlesticks here, right? Candlesticks are very, very important because candlesticks are like it's a language, in everything you do is a language, if you are doing trading, it's a language to speak to. Candlestick is a language, any country you're going to, there's a language they speak about, you know. So candlesticks is a language to understand the market. So when you know the candlesticks, each candlesticks in the market, it's like a language you're understanding what the market's going to tell you, if you know what I mean. So looking at this, looking at this as well, you see this big candle has to overtake this bullish and bearish engulfing candle here. But normally it's supposed to happen because it's an indication of a strong high which is going to be taken. You know what I mean? So looking at this, I tell you I'm an indicator guy. I've been doing market structure for a long time and price action for a long time. That I just find it easier for me than to be doing doing indicators. I don't do indicators, but it is what it is, you know. You see another one. See another one. It's a proper double top, right? Double top, because you can see it's one point of see this, see here, one touch, two touch, three touch. You draw a line here, you get me? And when you draw a line here, that means there's liquidity above here. When there's liquidity above here, the market puts liquidity so I can seek refuge when it comes to take it next time. You know what I mean? So this liquidity here as well, but I don't take a liquidity yet. He has to come back down here, take away some liquidity below here as well. You know, top down analysis, Scotch RSI. You know, you see, price full fill this FVG, if you know what I mean. Vector candle, spoke about this vector candle. Don't ever enter a trade when the market is giving a vector candle, if you get what I mean. It has to give us a retracement for us to get into the market, if you know what I'm saying. Divergence, right? vector candle, say liquidity below here. This low is just a liquidity. Why? Because this low failed to create a new higher high. See, if it failed to create a new lower high and a new higher high, but anyhow, this is what it is. The market will not do everything perfectly. Sometimes it might be perfect, sometimes it might not be, if you know what I mean. The point of this is showing that nothing is perfect. You're ready for the perfect strategy, the perfect entry, the perfect point of interest for you to get into the market. It's not going to happen. But if you know every candlesticks, what it's talking about or what it's trying to say, because candlesticks is like a language in the market. You can actually identify where you can enter the market, if you know what I mean. I'm sure about testing, you can know so many things about this. Okay, you can see high protected, if you know what I mean. The liquidity below, so the liquidity here, but a tiny wick came and took away the liquidity above here and dropped down. Why? Why though? Because it's showing that the market always try to take out liquidity for you to create a big move. If the market don't take out the liquidity, that means the move is not going to be big. Might be a short move, you know, but if the market take out that liquidity, the movement is going to be fucking big. So if my language, but it's going to be fucking, it's going to be big in a way that you going to be surprised in what is going on, right? And I say I'm not taking the liquidity above here. It's a strong trend, you know, it's moving down like a trend movement. Don't forget, this is what accumulation, consolidation, ranging market. You know, after the consolidation, the market has to do what? A manipulation, right? After manipulation, you have a distribution, if you get what I mean. So a movement in the market. Okay, see another liquidity here as well. Check out the liquidity above here and keep moving downwards, if you know what I'm saying. So you can realize that so many things happen in the market right now, especially in summertime. If you are aware of this, right? Also, you can see that this is another example, right? An proper example you can take note of. All these red dots like this is you can find it, you can take them as a liquidity, or you can take them as a strong high, if you know what I mean. Not all red dots a strong high, some of them just like a strong low as well, you know, if you get me. High volume imbalance. When the market create an imbalance, wants to create a balance later on for it to make a movement. You get me, right? So the high volume imbalance, you can take a market up here, it's going back down. See, confluences, fake momentum shift, high volume imbalance, inducement. When the lower time frame structure is not followed, the last structure, the price respect, you know, confluence, fake momentum shift, you know, high volume imbalance. Look at it twisted, you know, all these abbreviations here is a meaning of fake momentum shift, you know, high HV is a high volume imbalance. Inducement mostly I can still call it algo, you can still call it liquidity. When the lower time frame structure is not followed, the last structure price is respected, you know. So you can see that with the high volume imbalance, right? The fake momentum shift. Okay, you can see high volume imbalance. The market came above here, take away liquidity, right? Because of a high volume imbalance. I tell you, the market need to create an imbalance after creating. It's like the market create a problem. After creating a problem, come and solve a problem, then you can create a move. So, and all these banks, HM funds, you know, retail traders, manipulation. It's all about a smart man concept. Like you have to be smart in the market because if you're not smart, you'll be taken away, you will be bothered, you will be disturbed. Okay, if you know the nature of life, you won't be bothered about life because you know life has a nature. Life today will be rainy, tomorrow will be sunny, today will be this and that, this and that. But it's all about life. You should understand the market very well. You won't be bothered, you won't be disturbed, you won't be disturbed about the the movement in the market. Why? Because you understand the market. You understand what's going on in the market, if you know what I mean. So the market create a high volume imbalance. They came again and take away the high volume imbalance and create a movement downwards. And this fake momentum shift is like manipulation, right? It's another manipulation. Manipulate the fake traders or the retail traders that don't even know, the beginner traders that don't even know what's going on. Take away the market, take away the money, enter enter the profile, give us a proper entry, make some money in the market, if you get what I mean. So see Monday is like this is a Monday setup, get me? Because the market has this Monday can be distribution, Tuesday can be manipulation, Wednesday can be accumulation. So the market this does what you wanna do. Don't compete the market. Don't compete with them. Learn with the market. In fact, don't copy the market, but what you have to do with the market is learn the market and follow the move, follow the market. Not follow the market without not having no idea what's going on in the market, but when you're following the market, you're following the market with the brain, knowing what's going on in the market. Okay. Let's see what if you want to wait for the confirmation on 1 minute time frame. Okay, it's 1 minute time frame, right? Wait for confirmation. Price induce this high strong high. New York, New York open trap. So you see in the 1 minute time frame, the market was trying to do something different. The AC on the lower time frame, right? Okay. Basically, the market was a high. This was a high, the higher high, right? So the market take create higher high to create a movement, if you know what I mean. Doesn't have all the time though, because you can see this as an engulfing pattern, but it depends what you're trying to do. Because the market creates traps as well. You can see fake momentum shift, if you know what I mean. Creating like a liquidity down here, but take away the liquidity down here. You know, going back up here, taking away this liquidity above here and going back down. It's about liquidity. If you want to take a sell from this strong high, you lose. Be careful to the timing. NY open trap, or you can set your SL above the high volume imbalance, if you know what I mean. Price induce this price induce this strong high. New York open trap, AC on the lower time frame, if you know what I mean. So you can looking at this, you see the market has been taken out, bro. See, market has been taken out above here, if you see what I mean. So it is what it is. And market take out this liquidity above here, gave us a good distribution. What's distribution? Movement downwards here, if you know what I mean. So I say when I told you guys that when the market is trying to take away the liquidity in the market, you want to give us a good distribution, a good low, a good down movement or wherever it's going to go, if you know what I mean. London Open, HVI, MS. So you can see that liquidity, right? You see momentum shift, you know. So it is what it is, man. It is what it is. Consider the market took out the momentum shift that was here, took out the liquidity down here, went above here, take out some liquidity above here. If you get what I mean, went downward. Liquidity was not taken here, but engulfing, those an engulfing bar. If you take if you take note, the bullish candle was a bit higher than the bearish candle, if you know what I mean. So we went right down here. So just like this, you have just take note of what's going on in the market. Okay. It's another profile example in the market as well. Build up liquidity. The market will build up liquidity like this. Okay, higher volume imbalance, liquidity here. Dollar signs means liquidity. Okay, I'll talk about the double top here, liquidity here, build up, below here. This week, anytime you see a week, don't take it for granted. Don't just say the week and say that nah, it's not important because it's a candlestick. Nah, liquidity is these weeks are very, very important. Weeks shows something in the market that you guys have to be aware of. Okay. And weeks are very, very important, honestly. Some traders use weeks for the entry and they make a lot of money with 0% drawdown, if you get what I mean. So when you get better in trading, get better in backtesting, realize that weeks are very, very important in getting a good entry point in the market. Also, this point of interest you can see here is a liquidity as well, you know. But I expect a failure swing. See, look at what's gonna happen in the next chart. Look at this. You see, if you say a stop loss, say tiny bit of stop loss, let's say 2% stop loss, if you know what I mean. And you see the profit margin is so like more than 7% profit margin. And what and it's in the 1 hour time frame, if you can see. So after building up liquidity above here, the market was looking for to take the liquidity. Market will create the problem and come and take away the problem. If you know what I mean. It's like life. Don't worry about problem so much because you'll go by yourself. If you know what I mean. Same as Forex. If you know what I mean, same as everything in life. Let's get back to the topic. Okay. So I expect a failure swing, if you know what I mean. So the liquidity was just I see weeks were just battling down here. Why did you battle down here? Because we realized that this point of interest was very, very strong, and gave us a big entry. Here as well, this wicket took out the liquidity below here. That's why it no bother to come back down anymore. So just keep going back up here. It might come back down, but not now. So I want to continue this video another time because right now you have to be aware of build up liquidity, be aware of high volume imbalance, be aware of fake shifts in the market, if you know what I mean. And also you have to be targeting areas of wicks. If you see wicks in the market are very, very important. Try and find double tops in the market. We're gonna go on a live chat and I'm gonna show you all these. Double tops in the market are very, very important because it's an indication of showing that it's a liquidity. That's liquidity for you, if you know what I mean. Don't take it for granted, if you know what I'm saying. And it's very important that you should take note of this as well. You know. Alright guys, I'll continue this some other time. Take care guys. I want you guys to just keep watching these videos bit by bit, slowly by slowly, so you can get everything right for yourself. Peace.